Hi, this is James Shrug with Westpac London's end of day report for Tuesday, July the 2nd. It was a pretty quiet day today really, no particularly exciting economic data released. We had factory goods orders in the US, they rose 2% in May as expected. We already had the durable goods component, so no real surprise there. The IBD TIPP Economic Optimism Index for July actually surveyed in the very last week of June. It's the first confidence measure in the US to fully be surveyed after the FOMC meeting and Bernanke press conference on the 19th of June. And it fell, not that dramatically, fell from 49 to 47.1, and the various components, including federal assessment of federal policies, personal financial outlook, and the broader economic outlook, all of those components contributed to the decline. Recall that some of the other confidence indicators in the US are at multi-year highs for June, so it remains to be seen whether the recent turmoil in equity markets and talk of tapering, etc., to see whether that has had a material impact on those indices in coming weeks. There was a New York ISM survey, not closely watched. It's related to the national ISM survey, but doesn't have the same survey respondents necessarily. And it fell to a new post-recession low in its June reading. It's worth noting that the national ISM factory survey in the last 3 months has run its weakest quarter since the 2009 recession. So on some measures, the US economy is not doing so well, including some respected ones. Which contrasts with the message from some Fed officials at least, who've selectively chosen some data, it would seem, to point to a view that the economy might be doing better, but you can certainly point to other data that doesn't show that. We think there's still considerable uncertainty about the outlook. We think the risks are to the downside. We don't think the Fed will achieve its growth objectives such that they won't begin to taper their purchases of assets in September, which seems to be the current mindset of a majority now at the Fed. In Europe, we had producer prices negative again in annual terms for the second month running, the weakest since the collapse in producer prices in the 2008-2009 recession. The UK construction PMI, though, recorded its highest reading in over a year. Still very subdued, just 51. But another sign that that part of the economy, having had a rough second half of 2012 and earlier this year, is coming out of recessionary conditions. That was it on the economic data. We've got various Fed officials speaking later on, and they certainly are generating a lot of interest at the moment. So market moves could change, but as they stand, just after the European close, the FTSE in London actually just down 0.06%. The French market down 2/3%. Germans are off 0.9% today, and smaller losses in the Spanish and Italian markets. The Dow at the moment is up 0.2%. It's at 15,006. In the commodity markets, we've got some modest gains to report, with oil up at 0.86% at $98.83 a barrel. But we've got losses of between 0.7 and 0.8% in copper and gold prices. The gold price is at $1,245 an ounce. And the Aussie dollar, it's at 91.5 against the US dollar at the moment, so not far above its close to 3-year low of just above 91 cents that we saw earlier this week. And the latest sort of catalyst, if you like, for the Aussie weakness is the fairly dovish minutes from the Reserve Bank, which pretty much replicated that's a statement from the Reserve Bank, which pretty much replicated their previous statement and kept alive the prospect for further rate cuts. And that's certainly our view, that although they weren't going to cut today or Tuesday, the scope is very much in place for a sequence of further rate cuts in our view. All right, we've got US holiday on Thursday, as I mentioned yesterday. We've got more data to report tomorrow, including the ADP private payrolls, clue to the official payrolls data coming out on Friday for the US, and also the weekly unemployment numbers for the US. So a few things to watch for there. Okay, I'll be back tomorrow.